Welcome to Markets Now. I'm Michelle Rook along with Allison Thompson from the Money Farm. And we're seeing some weakness here to start off the day and to start off the week. And Allison, let's talk about the grain trade because we didn't have the best closes last week, especially in corn and in the wheat market. And so we're down into areas of support that really need to hold here today, right?
Yes, we are. Friday's trade was not very pretty. We definitely tested some recent lows on both corn and soybeans. Luckily, they did hold yesterday. Now, this morning, we're definitely testing it on the corn side because we're seeing some steep losses in wheat starting. So we'll have to see if corn's going to follow wheat down. But Chicago wheat really had an ugly day on Friday, making some new lows. Chicago or Minneapolis and KC definitely look better chart wise, but if Chicago continues to fall, I have to think that they're probably going to follow the same trend.
And unfortunately, these wheat prices are down at levels below where we were a year ago when the war started in Russia and Ukraine.
Yeah, the war premium's definitely been taken out of the wheat market, that's for sure. Even with last week, it ended up to be really a non-event. When we were starting the week, everyone thought we'd see some kind of action out of the Black Sea, and that wasn't the case. We didn't receive any fresh news to add to any more premium, to add any risk on in the market. So obviously the market's now comfortable with the way supplies chains have equaled out. And as far as going forward, we're obviously going to be dealing with the conflict for a while. So the market obviously feels comfortable where we're sitting right now until something new develops.
Right. And so the fact that we have had some recent rain in some HRW areas and there's some in the forecast, that seems to be kind of the thing that's breaking this wheat market down.
Yeah, that too, with the Kansas City wheat, especially, that's where our biggest losses are. They did have some good weather systems last week and over the weekend. No doubt there's definitely places that got missed. So again, when it all comes down to it, winter wheat has an eye in live. So we'll see how it really comes out of dormancy and how it looks this spring before we get too excited on what conditions look like. We have producers down in that area, and it's kind of a mixed bag of what we've been hearing. Some looks pretty bad. Some will probably get worked up at some point too. So we'll see. Again, it's just going to come down to spring and spring weather, and we can say that for all three crops really till we know what's really going to be able to get in the ground.
Yeah. And as you mentioned, the domino effect, wheat weighing on the corn, the technical selling and fund liquidation kind of continuing there this morning. But soybeans held up better than corn and wheat last week. But, do you think we're going to hold up here this week? And do we have a lot of the South American weather issues already kind of baked into this market?
Yeah, well, really the continuing strength on the soybeans is that complex itself. The meal market still remains near $500 a ton on soy meal. So that alone is really keeping soybeans supported here, I think, more than anything else. And again, that goes back to South America's weather. I think on the grain side, we're starting to see it maybe be priced in a little bit. We haven't seen as much movements with some weather updates. And obviously, corn's still going in the ground in Brazil, and harvest is happening in Brazil, but it's definitely slow. But we've had a good premium here early in the year on just South America's weather concerns. So I do think a lot of it has been priced into the market, and now we're going to wait for real numbers to really get any further boost out of the market.
Absolutely. Cattle market, we had a very bullish cattle on feed report. Monthly cold storage was bullish as well, but it seems like we're fading that this morning.
Yeah, I would have thought we'd maybe get a little bit more of a boost than what we did. But yeah, there too, buy the rumor, sell the fact, maybe at play here. But ultimately, we're still sitting at really good cattle prices. Not a bad time to even start looking at doing some puts out to next year and protecting these prices.
And what do you think about the hog market? It looks like we probably put the bottom in, but as far as this market really appreciably moving up, it's kind of like we go one step forward and two steps back here on any given day.
Yeah, it is. It's kind of a back and forth, back and fill action, I guess. But there too, we just haven't gotten a lot of fresh news. A lot of that premium got worked in when we had ASF news outbreak. And even on the livestock side last week, we had some mad cow. So any of those type of black swans, or if any further cases develop, might give us a little extra boost. But other than that, there isn't a whole lot of fresh news. We know the fundamentals are fairly bullish. We've had good exports on the pork as well. So it should keep livestock supported. Just depends what grains and outside markets do going forward.
All right. Thanks for joining us, Allison Thompson with the Money Farm. That's Markets Now.